and welcome. You're watching Your Trades. I'm Kavita Thapliyal. With me is my colleague Mansi Dave. And today, the headline is that Mansi, the market shut shops above 25,000, and IT sector, the index shuts almost 2.5% up. The market closed almost. There was a tussle between the advances and declines, but then the ratio is almost perfect or balanced out. 1606 advances, 1183 declines. So all in all, Mansi, we can say a good session, although it was too range bound.
Absolutely, Kavita. We have shrugged off all the global jitters at present, and we have our own positive triggers and cues on which we are working at present. And since last 3 days, in fact, this is the consecutive third day, and in fact the fifth momentum-based day for the market. But then over the weekend, from the government came in and from the Prime Minister came in positive views on the GST rate rationalization, and since then the sentiments of the markets have seen one side. But a good thing and a very unique thing about today's trading session was were two, in fact. One was 25,000, the level. Since last two trading session, we were trying to touch base that level, but to sustain on that level was not being possible. But in today's trading session, we did touch the level of 25,000, and we did close over above 25,000 as well. And the second thing was the IT sector. After the quarterly earnings of IT majors, all hopes went off for the IT sector, but now it feels as if the IT sector has made a comeback. And in fact, the top performing sector during the session today was the IT sector, with 35,690 levels at around 1,000 points in upsurge, and if you see percentage-wise, around 3% uptick during the session. However, there are a lot of news flows from the government. We have the group of minister meeting which happened, post which we were constantly giving you the takeaways. Even before all of these meetings, we are giving you the takeaways and the important updates on all of it. But the eventual impact on the market, we see a lot of sector-specific approaches. Larger players were Infosys, TCS, IT players topping the charts, and then we had HUL, Bharti Airtel, Mahindra and Mahindra, which were contributing to the gains. And on the flip side, it was ICICI Bank, ITC, L&T, Reliance and Tata Motors, which were towards the downside during the session. But now to talk technicals of the markets and also the trading ideas with us, we have Rupak Dev, Senior Technical Analyst, LKP Securities. Rupak, thank you so much for giving your time to ET Now. Pleasure talking to you. The markets are seeing good signs of positivity since last three trading sessions, including the one today. And in fact, if we talk levels, Bank Nifty, of course, was not performing as it should, but Nifty and the broader markets were literally showing absolutely good momentum. What's your take on the indices?
Thank you for having me here. Definitely, the sentiment is very much bullish. The structure has changed. So for the last 3 days, Nifty has been trading above its 21 EMA. And previously, it was trading continuously below the 21 EMA. So the sentiment has changed. The momentum has changed. The momentum indicator RSI is in a classic positive crossover. And the backdrop was that the RSI was showing a hidden positive divergence. So Nifty currently is trading above 25,000 on a closing basis. It has closed above it. Since till yesterday, there was call writers who were overpowering the put writers. Now from today, the put writers are overpowering. They're having their position at 25,000. So I think there is a immediate support at 25,000 and crucial support at 24,800. And till the time Nifty is sustaining above 24,800, I don't think there should be any problem for the bulls. And on the higher end, we expect a rally towards 25,250, and above that, 25,500 looks possible.
Rupak, also one take, as far as the global uncertainty or jitters are concerned, the market so far looks shrugging it off all, okay? But then what are the important cues that you are waiting from Jackson Hole? And having said that, today a good bounce back in the IT sector. Is it on your radar as well?
So on the global front, mainly the Fed rate front, the more people are expecting a rate cut in September on the back of soft labor data. And though the inflation has not come below their targeted level, but they're likely to go with the rate cut to support the falling labor market.
Rupak, are we audible to you?
Yeah.
Okay. Ruba, coming to the consumption theme, see FMCG, consumer discretionary, white good, electronic, we're already set to see a festive boost for the next 5 months, and then came the GST rate rationalization news, which will further boost consumption. Having said so, for FMCG sector, the last 2-3 years have not been that great. What is your view for the sector now?
I think this sector, specifically the FMCG sector, is likely to witness a short-term pullback. I'm not expecting a complete reversal for the space. Uh, for consumption theme, I think that might be go towards the higher end, like the hotel stocks and other consumption stocks might go up significantly, but FMCG might have a limit in their upswing. I think for the index, 58,000 is a level where the index might witness a steep resistance. Above 58,000, there might be a possibility that the index might witness a complete reversal. But till then, I think it's a sell on rise kind of index.
All right. So sell on rise, at least for the FMCG, or let's say
Right.
we can wait for the consumption basket to start playing around. Rupa, quickly, what are the trading ideas on your focus radar?
So I found that the stock fact has given a 1 month consolidation pattern breakout on the higher end, and so the momentum has increased, and it is likely to favor the buyers over the short term. So I feel that it's a buy call around 1014, and target might be 1040 in the short term, and above 1040 the stock might move to 1080, whereas on the lower end we should place a stop loss below 960. The second stock is Infosys. The stock has moved above 21 EMA for the first time after several weeks, and sentiment has improved on the back of hidden positive divergence on the RSI. So I expect the stock to move towards 1600 in the short term, and on the lower end, one should place a stop loss below 1460.
All right, so these are the two picks from your end, Fact and Infi, where you are giving a buy call. Target for Fact is almost 1045 to 1080, and for Infi it is almost 1600. But having said that, Rupak, I also want to know your focus on the defense sector. Now, considering it's a long-term story and the government spending is also going to increase over here, any specific stock which can be a long-term play, or maybe anything on festive that you want to buy and just get the momentum tracked in your portfolio as well?
Yeah, obviously, HAL would be one stock that I would like to have in my portfolio. Lately, it has been consolidating around 4,400, and one should go long, keeping a stop loss below 4,350. And once the stock moves beyond 4,600, so it is having a resistance at 4,600. Once the stock clears the resistance of 4,600, it is likely to move towards 5,000, 5,200 in the short to medium term.
Rupak, thank you so much for joining with us and giving your views on the markets, sector specific, on the back of news flows, and also stock specific recommendation along with your views on the indices. Thank you so much. Moving ahead, and while we were discussing the defense sector with Rupak, let's also understand this a little more. Rajesh Bhatia, CIO, ITI Mutual Fund, sees exponential rise in defense spending over 10 to 15 years. He also advises to wait for the valuations to correct as he finds them unreasonable currently. Let's listen in.
I think it's a no-brainer that defense spending for the next 10 years, given this geopolitical context, the need to increase our, independence on defense products is going to increase, and therefore the visibility for spending on defense products is going to be high for the next 10 or 15 years. So I think it's a no-brainer that there's going to be good allocations to defense spending. But as you also correctly point out, are these stocks valued at a reasonable price? My answer at least, is no. So you look at good business models or good moats in these companies, wait for corrections in the stock prices of defense companies, because it's a long journey.
All right, so a long-term theme as far as defense sector is concerned. But then let's move on. IT Minister Ashwini Vaishnav tabled the promotion and regulation of online gaming bill 2025 in Lok Sabha before the session was adjourned amid protest by opposition. The bill is aimed at regulating online real money gaming platforms. But what is online gaming bill and its key provisions, and what will be its impact? Snehi joins to explain all this to us. Snehi.
Well, yes. So the government has introduced the Promotion and Regulation of Online Gaming Bill 2025 in Lok Sabha. Let's understand what is the bill, why the need for this bill, and what the implications could be if the bill is passed. First up, let's understand what is the bill. The bill seeks to ban all forms of online real money games, that's RMG. What are these RMGs? RMGs are platforms that require players or users to give an entry fee to start playing the game, and they also provide cash rewards to these players. They include any online games that involve cash stakes and monetary winnings, and under this draft bill, all online real money gambling games will be covered, and any game which involves users stake or win money would be banned. What does this bill propose now? The bill makes it an offence to offer, aid, abet or induce or otherwise promote any of these games. They classify any game involving an entry fee or a monetary reward, whether it is a game of chance or a game of luck. All of these will be clubbed under the gambit of real money games. Also, the advertisement for such games is prohibited under this bill, and it also bars banks and financial institutions from processing any payments linked to any of these RMG platforms. Why this bill in the first place? Because the bill suggests that there are reports that indicate that when players get too addicted to games like this, it causes mental stress, some trauma, it causes suicidal thoughts, and along with that, psychological stress, distress, financial hardships, disruption to family life and social relationships. All of this is covered under this bill. The bill, in fact, also takes it to the stretch of saying that a lot of this money that is used here is also used to fund terror, and algorithms are opaque, and that could be misdirecting the users that are playing on these games. So if this bill does get passed, who stands to get impacted? It's going to be Nazara Tech from the listed space, because via their subsidiary Nodwin and PokerBazi, they have their presence in the online gaming system. So this is a stock that stands to get affected. Along with that, other fantasy players that involve money and monetary transactions like Dream 11, My 11 Circle, Halo Fantasy, SG Fantasy, Winzo, Games 24/7 and Jungly Games, all of them stand to be adversely impacted. So all eyes are going to be on whether or not this bill is passed and all the motions for and against that are argued for this bill. But as of now, this bill has been tabled and introduced in the Lok Sabha.
Absolutely, Snehi. Thanks for all of those details. Game over for the real money gaming is what we can say. But on the same, Nitesh Mittersen, Joint MD and CEO Nazara Technologies, talks about the impact of online gaming bill on the company's financial. He says that they expect limited impact from this bill on the businesses of the company. Let's listen in.
Company continues to be on a very strong growth track. In terms of Moonshine, while they are leaders in the space they operate, because they are, focusing on growing their business, the company has at this point of time reported quarterly EBITDA losses, and as a share of associate, we took approximately, I think it's between 20 to 25 crores, maybe 23, 24 crores of PAT loss as a share of associate in Q1. So it was not contributing profits even at a PAT level to us. And therefore, we do not expect, any negative impact on us on the financial operating side.
Aurobindo Pharma has issued a statement clarifying that reports of buying out Prague-based generic drug maker Zentiva are premature and no binding agreement has been made by the company. Srishti is here with more details. Srishti, what all is the company saying?
Well, yes, Aurobindo Pharma is actually down in trade today because there were some reports actually suggesting that Aurobindo Pharma could be in close to do a deal of worth $5 to $5.5 billion. That in INR terms is going to be a really big one. That 43,500 to 47,900 crores in that particular range in order to buy Zentiva from Advent International, because do remember Zentiva is one of those organizations which have a major presence in Europe. In order to consolidate its business in that particular region, some reports suggested that Aurobindo Pharma could be one of the contenders over there, along with one of the PE firms from US. But on that front as well, we also have the clarification coming in from Aurobindo Pharma denying such reports. For now, what they're saying is that at present, no binding agreement or definitive decision has been made by the board. Along with that, the company also do suggest that yes, of course, the company regularly explores various strategic opportunities in the ordinary course of the business in relation to the transaction referred in the reports. As of now, what Aurobindo Pharma is clarifying is that the said news item is a little premature and not to be relied upon. But yes, on the back of this particular news flow, Aurobindo Pharma is indeed in focus. Given the size of this particular deal that was likely, the stock was definitely hammered because of the concerns that how these fundings will be through and at coming at this point in time, how all the things will be managed. But yes, post the clarification as well, we have seen a bit of a recovery on the stock price from the day's lowest point.
Absolutely. So on the back of news and concerns, the stock was hammered to around 4% during the session. But now let's go across and understand what were the other stocks that were doing rounds on the exchanges. We have Rabinder joining with all the stocks and news. Rabinder.
Well, yes, TCS were in focus in today's trading session, where Finnish retailer Casco has partnered with TCS to drive AI-powered retail transformation, and TCS will deliver SAP as for transformation, digital development, application managed services, and intelligent automation to help Finnish retail group scale operation, launch next-gen digital services, and drive growth. Apart from this, PG Electroplast were also in the focus in today's trading session, where PG Electroplast and PAX India has announced a strategic manufacturing partnership in India. Moving to next, Dr. Lal Pathlab is also in the focus, where Dr. Lal Path has become the first laboratory in the country to adopt a deep learning-based AI module to detect lymph node metastasis, including micrometastasis in cancer cases. Apart from this, realty stock Phoenix Mills were also in focus in today's trading session, where Competition Commission has cleared the Phoenix Mills proposed 5,450 crore deal to acquire a 49% stake in its joint venture firm Island Star Mall Developers Private Limited. Apart from this, Hero MotoCorp were also in the focus in today's trading session, where company has unveils its all-new Glamour X125 futuristic design and first in segment technology and superior performance. And lastly, SRF were also in the focus, where Commerce and SRF Limited has announced a strategic agreement in India to support market needs for assistant application by 2026. So back of this, SRF were also in the focus.
Thanks for all of those stocks and news, Rabinder. And now Snehi is with us and telling us about the triggers and cues we need to watch out for tomorrow. Snehi.
Well, yes, lots of cues to watch out for very closely when it comes to action back home. It's going to be day 2 of the GST group of ministers meeting, and the agenda is going to be rate rationalization. Big agenda, big meeting, and lots to track on that front as well. Other than that, we'll have the PMI numbers coming out. The HSBC services PMI numbers will be out, along with composite and manufacturing PMIs too. And since it's Thursday, weekly Nifty expiry, all eyes are going to be on that as well. Globally, from the US, UK as well as Japan, we have global manufacturing PMI numbers coming in. From the US, along with that, you have initial jobless claims as well as the very important annual Jackson Hole Economic Policy Symposium will be beginning, where Fed Chair Jerome Powell will be giving his last speech as his tenure in the form of Fed Chair. So that is going to be very, very important to track any commentary on the labor market, inflation, any visibility on rate cut in September, if or not, is going to be very important to watch out for. From Eurozone, along with their PMI, you also have consumer confidence data coming out in terms of global earnings. Walmart and Workday are going to be in focus, but let's focus back home, and some stocks in focus will go. The first one will be GMR Airports. The board is going to be mulling a 5,000 crore rupee fundraise, so watch out for that. Vedanta is the second stock in focus. The board is going to be mulling its second interim dividend. So these are stocks in focus on the back of their corporate action and board meetings. You have names like HAL and RVNL that will be trading ex-dividend, and it's going to be the last day to buy shares like Federal Bank, APL Apollo, IRCTC, Jindal Steel, LIC Housing, Lodha Developers, Paradeep Phosphates and Godfrey Phillips among others, to be eligible for their dividend record date if you wish to do so. In terms of AGMs, you have Yes Bank, PNB Housing Finance, CEAT, Aisha Motors, Brigade Enterprises, Bandhan Bank, Hindalco, and a whole host of other counters or companies that will be holding their board meetings and AGMs. So track that as well. And well, yes, that's going to be all the events to watch out for. Big thrusts and big cues going to be the GST GUM meeting day 2, and of course the annual Jackson Hole Symposium in the US.
Right, Snehi. Thank you so much for all of those cues and triggers we need to watch out for tomorrow. Well, on that note, it's a wrap on this edition of Your Trades. It's a goodbye from me, but we have a lot lined up on ET Now, so you stay tuned with us. Thank you.